Budget is also around the corner, and we have to really take a look at all the aspects of the budget expectations, which is really building in, and what are we really entering when it comes to the budget as well as the market momentum. That's what we are going to focus on. Anand Rathi, who's the founder and chairman of Anand Rathi Group, joins in here on NDTV Profit. Anand Rathi, always a pleasure to speak to you. And also, now as we enter into the budget, what are you expecting as the main theme which the government will work on? FTAs have been signed, GST reforms have been taken on beyond the budget, but this particular budget is also going to be critical in a very different world order where India is protecting its self-reliance as well as also putting in a hard stand when it comes to also looking at our own interests. Anand Rathi, your views.
Thank you. Let me first wish you a happy new year, not too late to wish to you and all your viewers.
Happy New Year.
I think yes, this time budget is going to be, given the circumstances, the geopolitical situations are in, and also still the pending agreement with US on the tariff. I think there are certain difficulties, but still I think, Modi ji, our Prime Minister, has committed that this time, this 5 years is going to be very different. So what I expect is that more reforms coming into this budget. Particularly, I think, though the finances may be under pressure, but still, I think government needs to increase its capex continuously, because it's the infrastructure push which is going the economy very good. And I'm sure that government will at least move the budget by 15% on the capex side. On the tax side, GST, I think obviously good efforts have been made, which is paying results. But on income tax side, particularly personal income tax, I think the way the taxation policy has been changed last 4-5 years, the increase in taxation on dividends, overall impact on the tax on individuals has gone up. I think the government, will look forward to some reforms there, bring it down, because ultimately the goal has to bring down the personal tax rate to 30%. I think in how much time it needs to be done, that's a question with government looking at the finances as to do. And third thing which I expect is that the fiscal deficit obviously should not grow beyond 4.4% this year, and going forward bringing it down towards 4%.
That's right, Anand Rathi. In fact, fiscal prudence is one of the main aspects that the government has been very steadfast on. But from the market perspective, of course, last budget had increased the taxes on long-term capital gains. Now, on that particular front, is there a wish list and an expectation of that being corrected further, or to make the market more attractive at this point while we are seeing so much volatility because of global uncertainty?
I think obviously there is a need to bring down capital gains taxes. But as we have seen, the government after government, I don't think they have taken steps. But one thing which can do is to bring down the transaction tax on the transactions, okay? Particularly on the cash market transactions. I think, these cash market transactions were brought in to substitute capital gains tax by the time capital gains were made exempt. But now the capital gain tax have come back, and the transaction tax still continues to be there, and even at a higher rate. I think government, for the market, obviously, if we can help in capital gains tax or in transaction tax, that will be a good signal to the market. Besides, I said the personal tax. I think the biggest signal to the market could be the bringing down the personal tax rates.
Both are going to have very, very positive impact, Anand Rathi, because one will leave more cash in the hands of people to put in the markets, and the other will make equity investments more probably lucrative and attractive. Looking at the overall scenario where the Indian market is right now plagued with FII outflows, what's your view on that, and what can be done, because it's more of a global factor with dollar debasement and a lot of Japanese interest rate going up. So a lot of fund flows are getting impacted. For FII inflows, what should be done and what is it that the global investors will watch out for in the budget, according to you?
You see, the global outflow has been there in last 2 years, primarily due to, I think, the thinking that the Indian markets are overvalued. And but to my mind, the things will change because I think the Indian markets have been valued at this level for last 10 years. I think, but since other markets were undervalued that time, so a lot of money has gone to Japan, a lot of money has gone to China, South Korea. I think things are changing because those markets have also now gone up. The relative change in valuation will make Indian markets attractive because your GDP growth going to be high. I think our own RBI and the global institutions are now showing higher expected GDP growth. So my belief is that finally market fundamentals are linked to growth. If GDP growth is high, markets are going to reflect that growth in terms of their levels. So my belief is markets will do well. Presently there is pressure. These are temporary in nature. Whenever there is a great outflow, these sort of things happen. But see the growth coming from within. The amount of flows coming within the country, the SIPs increasing more than 31,000 crores. My belief is more and more savings will come into this market. And gradually, I think, look at the scenario when FIs, instead of selling, start buying. That's the time when markets will pick up fast. So I think I will advise investors not to get unduly worried about the present market situation. These sort of temporary situations come many times. But at that time, to my mind, there are opportunities to buy rather than getting frightened.
Right, absolutely, and Mr. Rathi, thank you so much for that take coming in. This is Shreyansi as well joining in the conversation. I quickly wanted to try and understand if you mean that this could possibly, spell good news when it comes to FIIs. Do you think this is going to be flipping the script in a substantial manner when it comes to the budget?
I think so. As I said again, FIs there is not too much of correlation with the budget as such. I think major correlation would be changing in the world scenario, our positioning, Indian markets position vis-a-vis other markets, and also more importantly, the US market. US markets have been going quite a lot in last 3-4 years. That's where a lot of money has been sucked in there. But that market is dependent on, let's say, largely on 10-15 states. And there is now people are talking of AI bubble. No, I think if any time there is the big this thing come down of US markets, money will outflow from there and will come to India. So I think, but budget may not be really very relevant for FI's money coming in
That's
as
right.
such.
But you mentioned a very important point, that is GDP growth. Most of the estimates do suggest that we are on a great growth path at this particular moment, Anand Rathi. But the Capex cycle, especially in the private sector, that needs to really be pumped up. And also, more fund inflows, FDIs coming in will also be critical because we cannot generate domestic pools of capital for our own growth. How do you see this scenario? And do you think that the government needs to give an injection to the economy when it comes to especially FDI inflows and private sector Capex cycle turning up?
Fine. As far as FDI is concerned, I think government is doing well to run PLI schemes, and perhaps they need to increase that more and more. Attract outside, other FDIs to come. I think if we like this signing of, agreements with EU, like UK, it has been done, Japan. I think that will increase the flow of money to India. Also, we must understand that India is a huge consumption market, and therefore there is a natural chance that many, companies will have to come. So I think FDI will grow, but government can obviously create more incentives, more, opportunities for that to come. As far as local investment is concerned, I think it's right that it's not growing very fast, but also there's a change I see in that coming in, because now the most of the capacity utilization in most industries are going about 75-80%. You know what has happened in last 10 years? That our industry has been becoming more efficient. With least investment, they're trying to increase their production capacity uh, by debottlenecking, by improving efficiency. And therefore, maybe we didn't need so much of new investments to come. But it's bound to come. If you look at the, for major sectors, cement, so much of announcements are coming for investment. Sorry. So I think the private capex is also increasing a bit slowly, and my belief is that as the markets are growing, as the GDP grows, the consumption will grow. When consumption grows, the demand grows, and therefore I think capacity creation will come in many more industries. Energy industry is doing very well. If we talk of power, if we talk of cement, so all basic industries are looking for growth. And my belief is that over a period of time, next 1 to 3 years, that capex will grow.
That's right. A lot of those seeds have already been sown. Some of the sectors like, EVs have already taken benefit of that. So a lot really happening. Anand Rathi, it was a pleasure speaking to you on your budget expectations. Thank you so much for joining us right here on NDTV Profit.
Thank you. Thank you so much.